Yeah. Yeah. Here we go. You guys ready? All right. Raymond says the 4.5-hour meeting last night was amazing. Yeah, too long though, too long. Yeah, too long. But it was good. I loved every minute of it, but it was too long. But good stuff. Yeah, good. Das is good. So good morning, everybody. Comment allez-vous? How are you? Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Oh, Denise says, I'm looking forward to watching that session again. It's 1.5 terabytes of data. Yeah. No, I'm joking. It's 1.5 gigs, though. 1.5 gigs. That's a lot. Anyways, yeah. So it's cool. Well, good luck with that. So anyways, welcome everybody. Let me remind you that trading is risky. It's not appropriate for everyone. However, your past performance, good or bad, is not necessarily indicative of future results. You win the Super Bowl last year. You don't make the playoffs this year. It happens. Yep. So I recommend stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hello, my name is Wayne. My friends call me Sir. Let me know how I can help on this thing called Forex. We can do technical and fundamental analysis. Great. A lot of this is psychology, though. You'll notice after a while, it's mostly psychology. It's how do you get your bias right? Well, that's through research. How do you have strong opinions but weak convictions? Well, all of that is difficult. But you have to start with the basics. You have to know technical analysis, and I'm sure that's what most people are focusing on. Then you need to learn fundamentals, and then you need to learn how to trade. It's a tough gig. 20 years from now, you'll probably, well, I hope, if you're lucky, 20 years from now, you'll still be doing your best to improve. Everybody else will be, I don't know, real estate brokers or something. I don't know. Some people will be running foreign exchange hedge funds, and some will be saying, don't you just love the light in this apartment? Oh, and I wish I had this kind of closet space where I live. And they call that sales. Whatever. So anyways, let me know how it can help. We'll go through gold, oil, and Bitcoin. We'll go through currency pairs. We'll go through the stock markets. Just if you want me to cover something in particular, just ask in the chat. I just don't spam and please treat each other with dignity and respect. You are in my home office, so be as professional as possible. I'm okay with having fun. But this is our profession. What else? Did you buy my book? I'm writing a new book. It'll be done by the end of the decade for sure. But if you've read the old one, please leave a review on Amazon. That'd be great. I'd like you to join FX Bootcamp as well. Yeah. Not because I want to buy a yellow Lamborghini, but because it's the best way for me to help. 88 hours of training videos for $88. If you don't got much money, that's a great education. Legit. There's no fluff in it at all. If you got a little bit of money, maybe join one of our live groups. So we met as a community last night and we did a 4.5-hour meeting. And hardcore intense. Yeah. Pretty amazing stuff. Again, too long, but if you could stick it through, holy smokes, covered a lot. And then also visit tradersway.com, open up a demo account, play some trades. If you're a member of FX Bootcamp, you get all my chart templates and tools for free. So maybe install them and play around. What you'll find is the execution speed is fast, the spreads are narrow, the swaps are great. Kill. So they check off all the boxes, sort of. I'd say those are the minimum requirements of choosing a broker, but that's better than most, if not almost all. But that's a minimum requirement. How do you choose a broker? Trust. So Traders Way earn my trust, they earn my loyalty, they earn my respect. I recommend that you check them out and then you make your own decision. Tradersway.com. Okay, first question of the day. Wayne, please. What is the difference between a pullback and a retracement? Okay. Nothing. They mean the same thing. Is that right, Jimmy? Jimbo zonked out, yeah. So, Ojo, the bigger question is, what's the difference between a retracement and a reversal? And that usually, that question clicks in when your retracement is more than 618. So typically a 786 Fibonacci retracement indicates a high likelihood of reversal. So if it's a pullback and you get a 786, there's a very high chance of a lower high and bears are going to enter. It shows weakness in the uptrend, and that will attract bears. All right, let's see how you answered the poll. Risk on, risk off, not sure. About 50-50. Okay, makes sense. That's what a market is. Okay, looking at current, these are the short-term indices. Aussie's trying to get some up today. Kiwi's trying to get some up today. CAD's trying to get some up today, but obviously not up trends. Even pound. So that looks like, so if I were to isolate all this, let me get my drawing tool. If I were to isolate these, let me do that. I'd say this is risk on, 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 and this coming down is risk on. Okay, and this coming down is risk on. So that's kind of interesting. To kind of understand the bigger picture, we got to look at larger time frames. And dollar is still very, very weak. Okay. And that's the big thing I think. Is that going to change direction? We don't know. CAD's very weak, so you can look to sell kitty CAD. Okay. If we zoom in here, you'll see that I have a trade. I'll move it to break even. Hey, I'm going to launch that super secret fundamentally based alert service. And that's where I got this trading idea, by the way. Wink, wink, nudge, nudge. All right. I'm going to launch it next week, I hope. I know I've been saying that for a long time. Maybe February 1st is the target. Maybe Fed Day or something, maybe. It's coming up though. I think I'm pretty much done. I just want to add to it and do a bunch of things. And in the presentation, I'm going to show you how to do everything the algorithm does yourself for free. So here's the upside. I'd like you to attend the presentation, so I'll set up a registration page, because I'll teach everybody how to do fundamental analysis quantitatively, so that those 8% that don't have a bias, you'll be able to have a bias based on logic, based on facts. So everyone will learn how to do it for free. Okay? Because I want you to succeed. That's fair, right? So I'll spend, I'm sure it'll be more than an hour of me teaching you how to do that. And then, of course, I will pitch you the service that will do it for you. So you can choose. You can just do it yourself now that I taught you, or you have it automated. You choose. Okay? You guys are funny. You're like, I'll be there, right? But you've already subscribed for 2 years. Yeah, some people have already subscribed for 2 years. You already own it for 2 years. Yeah, well, for some, right? Yeah, for some, it'll be a brand new thing. And for those that have already been sort of beta testing, okay? Beta testing, the what we call the retail subscription. I got some amazing, ridiculous news for you. So even if you want it, or even if you already have it, I got huge upgrades that you're going to get for free. If you tried it before and you're like, it's okay, but it's not great, which is valid, okay, which is totally valid. You're like, I tried it and it's not great. Fair enough. Come to the meeting. The upgrade will blow you away. Okay? So yes, Santiago, yes. It's going to become 10 times better. Okay? Yeah, I would say for those that tried it out for a couple of weeks or a couple of months and then quit, you need to come back and check it out when I officially launch it, and you are almost certainly going to want to resubscribe. In my humble opinion. Yeah, made amends for 2 years. Yeah. But yes, as Maida says, you still, even if you're in it for 2 years, and literally, you know, people have done that, you want to know how it works. And I think it's ideal to know what it's doing for you, you know? It's not magic. Remember, it's doing work. So anyways, moveon.com. Silver all over the place, going from the top of our range yesterday to the bottom of our range yesterday, and now we're back towards the top of the range. Quite all right, Lucas. 4.5 hours was too long. I apologize to everybody. Okay, so anyways, look at this. We can tighten this up if the range if you want. Right? I was just connecting, you know, the major tops and bottoms, right? So you can tighten this up a little bit if you want to catch these. You know, yeah, it's still kind of there. So anywho, silver on the 4 hour moving sideways. Quite a bit, huh? So what do you do now? Well, what we had said yesterday or the day before when I did this for you that you can only sell at the top and you can only buy at the bottom. So I wouldn't buy up here. You know what I mean? Right on. All right. Thank you, guys. Thank you. Okay. So silver. Hi-ho, silver! Right? So anyways, we'll leave that there. Let's take a look at Bitcoin now. And let's get off the weekly. Let's drop down into maybe an hourly. And you tell me, bullish or bearish? Are you bullish or bearish on Bitcoin? Two bulls. Bearish. Two bulls and a bear. Wait. Yeah, thank you. Yeah, look at a total market, huh? It's about 50-50. Well, let's do it this way. If you're a bear, you're going to look at it this way, and you have plan A, okay? Or if it doesn't roll over, and by the way, that's why you use technical analysis on smaller time frames to analyze if it's going to roll over. If it doesn't, then you're going to, once again, drop into a smaller time frame at 21,500 and look for it to roll over. And those are your two trade plans as a bear. Okay. Bulls have to look at it from here. And you really, okay, kicking off that 21. At least on this on this chart, that's what I would be trying to do. There's a bit of a danger because of the gap over the weekend. So if you're trading Bitcoin with a service that has over the weekend price action, you're going to have a different chart. So you got to be a little bit careful with that. Another way to look at this is maybe change your template and let's do, from a bullish point of view, daily confluence for a bull. Okay, what do we see here? What does this chart tell us? This is a profit-taking zone for bulls. So you're really not supposed to be adding new money, but it is what it is. So maybe you exited here and re-entered here on the confluence of let's say primarily on the moving average. And now what you're trying to do is climb the stairs. And we don't have that kind of price action quite yet. So there's a bit of a guess going on if you're a bull, but there is something. There is something. Like it's not falling. It could, you can see like it could. We're in that zone now where it could. But if you're buying dips, it just might work out. It might. If you're a bull. Okay? Just realize that the other 50% of us is thinking about selling it now or selling it later. Okay, so just be careful. That's all. But there's something there. There's something going on. The 8 EMA is working. The 21 EMA is working. There's something there for both bulls and bears. So it's a bit of a dangerous price, if you will. So pick your poison, my friend. This is where bias helps. See, if you're a bull, that wouldn't be a problem. You're like, oh, please, that's an easy trade if you're a bull. And a bear is really waiting for the next rollover. So a bear might be on this chart. That doesn't look like a great chart for it. Let's try a 30-minute. No, I'll go back to the 15. So a bear might be waiting for the next 5A cross down. See, a bear is probably going to, let's do it this way. I'll clear that out. There we go. A bear is probably going to look for a retest of this and this. So they're going to look for it here. And then what? They're going to look for a downward move, an upward move, and then they're going to sell. Okay? So if you're a bull and you bought low, it's all good in the hood. You're riding that 4-hour 21, which looks like this. But if you get a lower low, lower high scenario, Gem, you stop at break even, take a walk, try again next week. Whoop. Hoorah! Am I bullish or bearish on Bitcoin? I'm a macro trader, so I have one answer for everything. Okay? And that's I'm risk off. So let's go take a look at that for a bit, and we'll come back to oil and everything else. Let's go to the stock market indices. Okay? And so so I'm a bear here. I drew this a couple of days ago, this area, to show you that that's where we'll probably find some support. And so the big question of the day, okay, is will this happen starting today or Monday? That's my trade plan. So you could do something like this. Okay? Bada bing, bada boom. Yes, Stewie. Think of it this way. When you risk on, you're taking risk, which means you're converting your cash into a higher yielding asset. Or you're just spending it, which is consumption. So you're either converting your cash into consumption or investment. Oh, thank you, Raymond. My pleasure. So if you're converting your cash into a television or into a BMW or into a laptop, or into a meme stock, or into a futures contract, okay? You're converting cash into some sort of other thing. So you're selling your cash to buy something else. So when in America, because we're talking about a reserve currency, Stewie, when things are good, the dollar's weak. Now imagine the opposite. Things are bad, you lost your job, and you're struggling to pay your rent. So you sell your TV, you sell your car, you sell your Peloton. What are you doing? You're shorting stuff and you're long cash. You're long the dollar. Okay? So when things are bad, you're long the dollar. If the stock market's going down, that means somebody's selling their stock and they're long cash. Okay? Yeah. So I think pretty close to 15% of my retirement portfolio is cash right now because I've exited the stock market, converted assets, which is ownership of American, or let's just say corporations, because I own international stocks as well. But I sold my ownership of various corporations. So I sold the stock and therefore long cash because I converted those assets into cash. And that cash is a position. And my plan is sometime this year, convert the cash back into ownership of assets. Cool. So anyways, S&P 500, stable. So you could use this area here as your new sell zone. Okay. More aggressively, you could get something like that, but I don't know if everyone is in agreement on this. If we all agreed on the stock market, then it would trend. I think there's a lot of disagreement, and that's why I do these polls. 50% of you said you're bullish. 50% of you said you were bearish. So I would look at a market like this and say it's not going to move in a straight line. Okay. So this is sort of my best hope for next week. Otherwise, I got to continue to wait. Zamo says, or last week. Last week I was hit by a tornado, Zamo. Okay. And if you go to FX Bootcamp now, the recording is there. It was just such a big recording. It probably took longer than usual. Okay. But it is there. But yes, there wasn't one last week because of the tornado. Yeah. All right. So anyway, if I'm bearish the stock market, then I'm risk off. Yeah. Oh, my pleasure, Samuel. Just log in now. It's there. I know it's there. The actual recording is 3 hours and 38 minutes because we did 45 minutes of group work. Cool. Anyways, German stock market, okay, below the 21. Okay, that gets interesting. That would be risk off. That would bring the S&P 500 down. This is the FTSE, the British stock market, the Financial Times Stock Exchange. Okay? Boom. It also is bearish like the DAX, like the S&P 500. Maybe. I mean, look, you could buy it. The buying is a little bit lower maybe, but nonetheless, we're kicking off that 21 today at the market open. We're kicking off the 21. That smells bearish to me. Euro 50, okay, the European stock market rallied 10% from January 1st. Maybe it's time to take a break. Lower low. That sets up the lower high, lower low. Okay, that's technical. Thank you, Pete. Okay. The only thing going up is Hong Kong. Well, remember, there's a divergence in central banking policy. In the United States, in England, in Europe, the central banks are trying to slow down the economy and reduce inflation and by increasing the cost of money. Not in China. Not in China. Okay. Anywho, yeah. So risk off, risk off, risk off, risk off, risk off, risk on. That's differences in policy. This is the NASDAQ. And one of the things we talked about last night in the meeting was, my opinion, we should use the NASDAQ as our leading indicator for Bitcoin and not the S&P 500. Okay. Maybe something like that. What do you think? Maybe a little higher? 50% maybe? All right, so anyways, there's the global stock market indices. We've done some silver and gold and some Bitcoin. Let's take a look at I guess I don't think we actually did gold, so let's do gold. Okay. So, did plan A and plan B fail? No. Okay, why did plan A and plan B not fail? Oh, now I can't catch it. Anyways. Okay. Because I did my analysis, I did my research, I made my opinions, okay, based on my bias and my research. I came up with what I wanted to do, and that was sell gold. Okay. Then I did my technical analysis to try to figure out what price gold would begin to fall. Okay. So I looked at price. I did analysis of price, and I said maybe at that price and maybe at this price. Okay, based on the research. And remember, I did that way back in here somewhere. Okay, maybe even lower. Okay, so it was like plan A, and if that doesn't work, maybe we'll go a little higher in plan B. Okay, great. The thing is, that's just price. The next part is, at what time do I sell? So when we were consolidating in here, I said, not yet, not yet, not yet, not yet, not yet, not yet, not yet. Uh-oh, not yet, not yet. Okay. And technical analysis kept me from shorting this. I had the right rationale based on research, which formed my bias. So I had my opinion based on fundamental analysis. Then I analyzed at what price using technical analysis. And then the next one is the actual trade entry. And technical analysis saved me from making a mistake. At any point in here, I could have guessed and I could have just bet this is going to fall because I got my price. But remember, price is only one part of technical analysis. The other part is time. And I got the right price 3 times here. I got the right price 1 or 2 times here, depending on your opinion. But I never got the time. There wasn't a right time. Okay. So, in that case, my bias was wrong and technical analysis prevented me from losing money. So that's some good trading, I think. I think that's a great learning example. So now I have to just sit and wait and see what happens maybe next week. Or I just keep buying dips, riding to 21. But remember, for whatever reason, I still think down. So I don't want to buy when I think down. Now, maybe ignorance is bliss and it's just easier to buy the pullbacks. Okay, great. You do you. Rajneel? No. I suppose I'm not. I could. Whoa. Hey now. Okay. So when I look at gold quantitatively, okay, retail is 83% short gold, but quantitatively, you should not buy it. I mean, you could. We have a technical trend. But there's just as many things that are good as well as bad. So really it comes down to what you think, your opinion. Now, one of the things that I'm looking at is this. Okay? That's what, let's say, typically happens this time of year. But is that happening right now? No, we have this. So we could say, based on seasonality, it's bearish. Based on technical analysis, it's bullish. So at the very least, let's just be neutral. Now, obviously, there's a lot of other things that's gone into it. But you could probably find something better to do. I mean, it is rallying, and you might be making great money. Awesome. Okay. But it may not be, I don't know. I mean, look, it's doing it. It's doing it. So I don't mean to poo-poo on it. But if you maybe analyze economic data, maybe it's, there's something other than economic data, right? There's something else maybe than economic data in this play. Okay, so that's all. So again, neutral for me ended up being the right play. Frank wants yearly pivots. Oops. Yeah, sure. Okay. So we have very specific numbers for gold. We spent quite a bit of time, probably 45 minutes, talking about gold last night. Technically, fundamentally, psychologically, long-term, short-term. We looked at function. We looked at competitiveness. So like I said, for example, that for some reason I don't want to buy gold but I do want to buy copper. Okay. 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 Well, okay. So here, Rajanil says, so, what do you mean economic data? Why am I short gold? So you have to look at the data. So you look at the data, which is just what is and what has been. And then I filter that through fundamental analysis. Remember, news isn't fundamentals. So I filter this data that I have through the central bank's policy. What is the Fed trying to do? They want to have a policy that impacts the data. That's why I need to know what the data is, what the data has been. So that gives you changes over time. So you could say the data shows high inflation increasing, or you could say the data shows inflation decreasing. Then you have to then say, okay, what is the Fed trying to do? What is their policy? What's the impact of their policy in the future? And they are trying to create this. They want falling inflation. And you could, depending on your interpretation of what they tell us, interpret what they tell us as saying they want inflation to fall further. So I say that's deflationary. Well, why do people buy gold? To hedge inflation. Well, I'm like, but I'm not interested in that. Okay? Because inflation's falling. So there might be some other aspect. So we talked about negative real interest rates in the bond market and how that could possibly impact gold. That sounds pretty smart. Okay. We talked about potentially, lack of mining the resource, maybe. There's just lack of supply. We talked about, is there a use case for gold versus a use case for copper? Rajneil says, is gold a safe haven? Maybe so. But why are you buying gold now if you don't need a safe haven, do you? Maybe. Maybe you're just like, I'd rather own gold than cash. You'd rather own gold than a bond that pays you 3 or 4%. You'd rather, see, gold has one of the things we talked about is the negative carry on gold. And it's literally a carrying charge because gold has to be stored somewhere. Even if you just own a gold ETF, which we talked about, do you buy gold mining stocks? Do you buy physical gold? Do you buy gold futures? Do you buy this continuous contract, gold and dollar? We even looked at gold priced in Bitcoin, right? We're like, how do you want to get exposed to this? Well, gold's expensive to hold because somewhere, even if you buy an ETF, you still have physical gold somewhere and it's locked in a vault and the vault costs rent. You have to pay rent. So it's expensive to buy and hold gold. So you could just buy and hold a U.S. Treasury, a 10-year T-note, or let's say a 2-year Treasury guaranteed by the U.S. government, so risk-free, and you're going to earn 4% a year, where gold might cost you 4% a year. So, but then you're like, but I'm not sure about the US dollar in the future. Okay, well then, if you're not sure, that would impact your decision to buy gold. Or we also talked about this could have to do with the relationship between China, Russia, and OPEC, and the potential use of gold as now money, not as a safe haven. So, I mean, look, if you guys like this stuff, you should be in FX boot camp in the swing trading group. I mean, you can see, like, we tackled gold from more than a dozen angles of attack yesterday. The swing trading group isn't me going, you should trade the 5A cross down. Okay. Okay. Frank says, with the U.S. reserves of oil, how long can it still pump down the oil prices? Well, that was one of the things we looked at yesterday in the swing trading group. Like, again, we cover all of this. We actually looked at inventory levels of oil in the United States, and we have more than enough. It just turns out we're exporting most of our oil to Europe. So there is no shortage of oil in the United States currently based on historic norms. And by historic norms, I mean the standard deviation of inventory levels over the last 5 years. Okay. I can tell you we're at about 450 million barrels right now, and that's about right for this time of year. So again, if you guys join the FX Bootcamp swing trading group, you will know all these facts. And then what you do with your facts is up to you, but technical analysis is pretty easy. All right, so let's go to exotics. Just farting around here. Another opportunity maybe to move a stop. Remember what I was talking about before a week or two ago? Was it a week or two ago or just a week ago? Probably a week ago. I was talking about how when we were down, I think we were only down here. I said how this top and this top, right? That's why I drew these horizontal lines as places you could move your stop loss to. I was using that as an indication to move your stop here to lock in profit. Okay. Ross says gold. It's just gold is money. Actually, it's not money. And everything is debt that can be leveraged. Yeah, I know. I think I know what you're saying, but yes. And we would have to get into sort of an esoteric argument, and I don't want to do that today. But if you look at the poorest countries on earth, and you can measure poverty any way you want, I don't care. Measure it with happiness. I've done everything, and I've done all the research. I literally in the macroeconomics course, I show you how the IMF measures GDP, not through consumption, investment, and government spending, but through things like how long you live, the potential for your children to die at birth, suicide levels, and they measure productivity that way, and you end up getting the same answer. So, everything else is, debt, and I think what you're saying is debt is bad. Credit card debt is bad. That's because people without money are spending money they don't have. Okay, credit card debt is bad. But most people with credit cards, they pay their bill at the end of the month and they get their miles and they travel on airplanes for free. Like most people are okay. Okay. But now if we look at economies, and you look at any poor economy, and like I said, I don't care what measure of poverty you use, but those economies don't have any debt. Those people, because there's no money, there's no credit. There is no credit. You don't have any debt because you don't have credit. But you probably have a tin can of cash hidden somewhere in your house. Okay? When I visited Cuba, I visited somebody's home and they had a safe full of cash. Now, let me tell you, the way a rich country works is there's tons of debt. Now, most of it is good debt. So you don't keep money in a safe or hide it under your bed or put it in a tin can and hide it in your freezer. You put it into a bank. A bank solves the asymmetric information problem, which means they find and analyze investment opportunities on your behalf. So they take your cash and loan it to a local business or loan it to your neighbor so that they can buy a house. And they convert your unused cash into credit, and that credit is given to a business or a neighbor, and that cash now becomes productive because it was in a poor country, it sits in your freezer, it sits under your bed, it's buried in your backyard, but the money doesn't get put into the economy. It doesn't do anything. It just sits there and rots. In a rich country, you have debt because you borrowed money from a bank to buy a house. And the money you borrowed is from your neighbor. Okay? But debt is also leads to credit, where I bought a house many years ago and it's doubled in value. Oh, but Wayne, you have a mortgage. Doesn't make me poor. So I'd be careful. I know what you're saying, Ross, but I can push back too a little bit. Debt, if you're buying, right? Put it this way. GDP. What do you do with your money? You consume it or you invest with it. That's your only choice. So, consumption, rent, okay, food, a TV, what? Going out to the bar, okay, putting gas in the tank, clothes. Look at me, I'm so rich, I own a Louis Vuitton handbag, which only poor people buy. But anyways, great. You see what I mean? So here we are. You have your choice. Now, if you then put the TV and clothes on your credit card, that is debt. So qualitatively, putting TV and clothes on a credit card because you don't quite have enough money because your rent is high or food prices went up. So you're like, well, I need a new TV or I need a new suit so I can, because I need, because you have a job and you need to dress nice. But you're like, but food went up. Food went up. My rent went up. Inflation. So you cut out the bar. You have to go to work. So you have to pay gas no matter what gas prices are. And then suddenly you can't really afford any of this, but you need the gas. You need the clothes. You really want the TV. And you're like, well, I can pay it off over time. So anyways, you end up putting this stuff on your credit card. Okay, that's bad. And I think that's what Ross is saying. Now, in a poor country, they don't have any credit. So you just don't buy the clothes and you don't buy the TV. You see? And, well, therefore, the economy doesn't go up either. So, but you got to be careful when knocking debt. because debt's not bad. That's just stupid. To borrow money at 20% a year to buy a TV, which is guaranteed to lose value, nearly 80% in the first year, loss in value, but you're going to borrow money at 20%. Okay, that's just dumb. But it's not illegal. Okay? Then there's the other form of debt, investment. So, and all that is leverage, by the way, because you do pay it over time. It's called amortization. But let's say I get out of renting because I saved money. Okay, saved money. So instead of consuming that money, I guess let me put that back. You have to have rent. Okay, let's do it this way. So a different person comes along and says, I don't want credit card debt. I'm going to cut back my spending. I'm not going to buy new clothes. I'll buy used clothes. I'll go to a thrift store. I don't go to the bar, and I don't want to buy a new TV. But I do need to drive to work. I do need to eat, and I need a place to live. But I want to save money. So saving goes on this side of the balance sheet if you want to look at it this as a balance sheet. And this is the difference between a rich country and a poor country. And don't get all pissy. I know some people get really pissy. Don't get pissy. Just listen. Okay? What happens when you save it in a bank is the bank turns it into investing. The bank invests it for you and pays you 1% interest. But they do turn that into an investment somewhere else in the economy. And the money goes to the economy, and the economy grows because when you save, you're not being productive with your money, but the bank puts the money into a productive project, like a mortgage or like a loan to a business that needs to borrow inventory so that, like right now, a shoe company is probably ordering shoes for summer. It's not summer now, but they're ordering shoes for summer. And so they got to borrow some money to buy that inventory. Then in summer, the shoes show up, and then they sell the shoes, and then they pay back their loans. This is how business works. So if you're not going to be productive, just save it in a bank, and the bank will loan it out. So in economics, savings is equal to investment. You either invest it into a home, or the bank will invest it into a home on your behalf. Okay? Now, Ross, be careful. I don't want to get into a debate, okay? But I am explaining economics, okay? So in this case, the bank's going to invest it, or I can invest it into my home. And get rid of my rent. Now, the cost might be about the same. Okay, I saved and saved and saved until I had 20% down. So then I get 5-to-1 leverage. So now the loan, okay, 80% of it comes from the bank. But the house is worth more than the loan, even on day one, because I own 20% of it and I borrowed 80. And over time, this falls to 70, to 60, to 50, to 40, to 30. But also at the same time, the value of the house goes up. That's the big difference, Ross. Okay? That's the big difference. Now, obviously, there's risk that the value of your house can go down. That's not typical. That might be happening now, but the central bank is slowing the economy down on purpose, which is, again, really not typical. We wouldn't have a recession unless the Fed raised interest rates as high this quickly. So anyways, so typically what happens, Ross, is the value of your loan, or let's say the amount of your loan over time falls, and the value of your home goes up. and your net worth goes up. And everyone's net worth goes up because the economy is very, 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 very efficient at allocating resources. In a poor country, and again, I don't care how you measure poor, and I don't care which country, they're not very efficient at probably anything, but certainly deploying capital that's not being productive. There may actually be very little unproductive capital. There may be very little capital. Okay? But the thing is, a big differentiation in economic growth or whatever has to do with the ability of taking savings, which is unproductive money, and converting savings into investment. And the better the economy is at turning savings into investing. See, when you invest, then you get a return on investment, so you can save more, so you can invest more, so you can save more, so you can invest more. Okay? It's about being productive. Okay? So again, if you borrow, so let me end it this way. If you borrow money to buy something that's not an asset is an investment. An asset produces a return on investment. An asset in the future will be worth more, or it provides you income, like rent. So if you borrowed money from a bank to buy an apartment building that pays you, let's say, $20,000 a year profit, and 5 years from now, the apartment building is worth 10% more. Okay? Well, then you got $100,000 more in cash than you used to. And the value of the property went up 10%. Dude, that's a good use of debt. Meanwhile, you're paying down your loan and all that and amortizing and everything's good. But if you borrow money, let's say a credit card, you borrow money to buy a TV, there's no return on investment. There's only loss. And your cost of borrowing is 20% a year. So if you are literally, you can't afford a TV, but you buy it and you say, well, I'll just put it on my credit card and I'll pay for it over time. That is really bad. It's a very, very, very bad economic choice. If you were able to do the math, it is literally stupid. So, you can try this with anyone that behaves this way. Let's say you're looking at a TV. Well, let's say it's $400 at Walmart, and someone doesn't have the money, but they're like, oh, but it's such a good deal. I'm going to put it on my credit card and I'll pay for it over time. Well, you're paying for it at 20%. Okay. So you can ask a question like, well, would you pay $600 for that TV? You're like, $600? No, I want to buy it because it's $400. Yeah, but by the time you're done paying, it will be $600. You're like, $600? I can get a much nicer TV for $600. Yeah, but you are deciding to pay $600 for a $400 TV. And they're like, oh, I wouldn't do that. But you are doing that if you put it on your credit card. Okay? Okay. So there you go. So it depends on how you use your capital. And guess what? Rich people probably don't buy TVs on their credit card. Okay. So anywho, so once again, going back to this chart, this is now a higher high, so this sets up bullishness. Well, so under rules of risk management, you should probably already be out of this trade. Another way to analyze it, let's do this. Let's go to PSAR. Let's do parabolic stop and reverse. Lime green, eh? Oh, for sure. Let's just do black. How about that? And I'll zoom in here. Okay. And you can play around with PSAR any way you want. Find your right setting. But parabolic stop and reverse is suggesting where stop losses could be. Okay. So let's go to a 4-hour. Okay. And they're giving you an idea where the stop loss should be. What I'm looking at is this candle here would have been a great candle to exit this short position. Okay. That's what it's telling you. I'm wondering if I have a different PSAR than this one. Let me delete this. I might have a different PSAR. Parabolic. Delete. Insert indicators. Maybe I don't need a custom one. There we go. Parabolic stop and reverse. White. Oh, that's interesting. We'll put this one black. Yeah, I think it's the same. No, there we go. Better. All right. So this setting of parabolic stop and reverse says that this is where I should have exited. It's actually, let me get the exact candle so we can figure out the exact price. Okay, yep, right there. Okay. And so right now, it said, Wayne, you should have taken your profit from here to here, and I should be out, and I should be happy. Well, I'm trying to show you, let's say, the strengths and weaknesses, the benefits and the threats to holding trades longer. Okay. Patrick says, I had no idea that indicators like that existed. So what it's doing, Patrick, is it's looking for, it's looking at volatility. And what it says is there's good volatility, which means the rate of change is strong. Okay? So if you're a bear and the volatility it's falling quickly, okay, then PSAR does not move your stop. It says it's falling fast, don't move your stop, don't worry about it. Let it run. But then later on, okay, in times of consolidation, it moves your stop in quickly. So it doesn't move your stop, doesn't move your stop, doesn't move your stop. Okay, pulls in your stop, pulls in your stop, pulls in your stop, new lower low, new. Okay, doesn't move your stop, doesn't move your stop, doesn't move your stop. Like, look at the distance between price and the stop loss versus price and the stop loss. Okay, it pulled your stop loss in when you were losing volatility. And then it doesn't do anything to your stop when you're gaining volatility. So again, once you lose volatility, it locks in as much profit as quickly as possible. Okay. So I'm just trying to show you, remember, one of the things I was trying to show you when we took this trade is how to stay in the trade longer. Okay. Based on my interest income, I'm at 90% return on investment now, or sorry, internal rate of return. So I am showing you one benefit of staying in the trade longer. I have also 500 pips in profit too. Cool. So pretty close to a 600% return. Great. But along the way, there are some real risk management issues, and I'm trying to point out the downside to holding trades longer and maybe how to deal with that thought process. Now, first of all, what is this green zone? That's our projected low for the month of January. If you follow the rules of engagement I give you in my training course, you would have gotten out here with all the money in your pocket. You didn't have to wait for PSAR. PSAR is lagging. Pivot points are a leading indicator. We knew that on the 1st of January. So you could have walked away, maximum profit right there, maximum predictable profit. But again, that's a management issue. So my goal isn't, I'm not showing you how to manage that trade. Somebody asked me, how do you stay in a trade for longer? Well, I'm showing you how to do it. But it's not always the right choice. And really, along the way, I probably, getting out would have been the smarter thing. But even back in this move here should have taken me out of the first part of the trade. And then I should have re-entered here and then have gotten out. So from here to here is the better, right? I should have exited here. I should have re-entered and I should have exited here, in my humble opinion. But that's not the objective of the sample trade. Kyle says, I remember you saying it was time to take profit. Yeah. But again, that's a management issue. That's all. There's no right or wrong. There's just a decision. So I'm trying to show you different ways of making the decision. How's the new book going? Oh, it's going to be a long, long endeavor. I got to clear some other stuff off my plate, but I have started, and I have put thought into it. And have I done some serious work on it? No. It's one of these things like the way I usually work on these things is I need to leave. I need to go somewhere and sit for 3 days. And I know what I would do on those 3 days. And so I tried to do that when I was in Cuba. But Cuba was just so fascinating from an economics point of view. It's just it's just so amazing from an economic point of view. It was a real eye-opener, and I'm so happy to have done it. I've started. I haven't done serious work. I know exactly what I want to do. And so I need to clear some stuff off my project list and make that a higher priority and really organize where these times on these days I'm going to write in this order. And, so I'm still kind of doing that. Okay. Well, Richard, you will be more hireable. Okay. Cool. Cubans love Americans. They don't like the embargo, but I met a few Americans there. Not many, but the problem is Cuba didn't have any tours. There were very few people in Cuba. And you can look at it a few different ways. And I think one of the things is like, well, China's been locked down, so there's not a lot of Chinese tourists. Russia's locked down, so there's no Russian tourists, right? Germany is poor, so there's no German tourists. Americans, it's difficult to go, but it's not impossible. So it's just, Cuba needs a little bit of love. They're struggling right now. Cool. Well, it's been a long week, everybody. I'm just going to leave it here. Have a wonderful weekend. Thank you for being part of my community. Please click the thumbs up button. Maybe leave a comment under the recording. And and leave a review for my book on Amazon.com, please. Ideally a positive one. But if you hated it, put that down too. That's okay. It's fair game. Just remember, I'm not a professional writer. But I did give you the honest truth about how I learned how to become a better trader. Peace on earth. May the pips be with you. May our profits be above average. I'll see you on Sunday night if you're in my day trading group. Cheers.